Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
This is obviously I would say for the most part, you've been doing this for decades. So fundamentally at the core, fundamentally bullish and excited about AI for all the reasons and the climbing wall of worry. I am definitely more focused on following the flows as it relates to tactically being bullish, but I'm so, I guess the word is cautious because of the macro backdrop. So yes, they have a fiscal spending bill that is all gas, no brakes. And that is reason for the season also with this euphoria. But the trade wars are unknown. And that is definitely keeping a lot of money, as you put it that way, not yet deployed because it is worried about the impact. Only thing that's happened with policy intervention of late after the April swoon is that it pushed out the risk a quarter. So as long as the earnings were good for Mag 7, the market doesn't care because it's so heavily concentrated in that weighting. But for the most part, this is a time where I'm definitely tactically bullish, as I keep saying every time we're here, but macro bearish. And macro bearish means that yes, we're near all-time highs. We have the potential for a melt up. I did not see that potential when we were 6,000 back in January. And I wrote that hat. I said, I will not buy the $7,500 SPX hat. We're going to 6,500, 7,000 tomorrow. And I just didn't see it. So we did start to have the selling underneath the surface that I could see, the breakdown in December that I could see. We don't have that right now. We have breadth that's still coming up and expanding off the bottom. It's nowhere near the highs. That's a divergence. Indicators that I have used in the past have been busted. That's also a kind of a telltale sign that we're mechanically driven higher, but not organically. And the fact that we have a lot of risk that isn't priced in because we don't know how to, because we keep expecting the taco kind of trade where Trump will retreat. And basically that is not helping CEOs in the here and now and economic growth. It has contracted for a quarter. OECD is warning that it will contract further, both globally and in the US. Apollo comes out and says the consensus now is forecasting a slowdown in payrolls over the coming quarters, which is contraction. Prices are still extremely sticky and or rising, both manufacturing and services, while the activity is decelerating. So we definitely are contracting. So under the surface, we keep getting these kind of tremors of nothing big is wrong, but the market doesn't bend, it breaks. So I keep looking at not just the Musk rant yesterday, who's now putting the GOP on notice, right? That Trump's reconciliation bill is abysmal, or what do they call it? Disgusting abomination. Now, obviously, he went to war in support. He's broken up with his master. And he's having a breakup, a lover's quarrel or breakup, which is worse. But the point is, the bromance is over. Bromance is so dead. Renewing Trump's tax cuts without cutting spending will impact debt and debt servicing. And honestly, the warnings that we hear from the bond kings, whether they be Gundlach, Druckenmiller, Dalio, Diamond, all of the greats who are saying, we have a problem. We don't even want the 30-year bond. We're just buying the short duration because we don't trust that this government actually knows how to get itself out of this mess. It just digs it deeper. So this is the type of situation where under the surface, we do have credit stress that has the ability to break harder. In other words, credit markets also, Apollo is saying, they have low liquidity against a rising rate backdrop is not a good formula. And they're experts. That is their market. That's how they make their money. So I look at the warning signs more so as a cautionary tale of don't get too fat and happy. Trade it tactically. Everyone has their time frames, and also portfolio hedging for those who are bigger picture and or manage money. But I definitely don't think this is a time to get complacent. We could have a melt up. It only to me would be honestly a better chance for the tent to fold. In other words, a fake breakout fast failure would be a high probability in my book if we do have a melt up. So I am still of the opinion macro bearish, tactically bullish, and that's just the way it's going to be. And then I'm looking ahead at what's going to happen with some of the deals, right? The peace deals have died on the vine, which was a big premise to getting into it, any particular bond bullishness. That's gone. The trade deals, we've had nothing except with the UK, and they have a surplus. And then this particular tax cut extension, debt ceiling raise, has infiltrated all of these very unsuspecting provisions that we don't know about, right? They're just just coming to the fore, like the Section 899, which is enforcement of remedies against unfair foreign taxes. That's actually a big deal. So trade wars are capital wars, and that one's a huge one. So I know you're very bullish, and I know all the reasons. 80% of the time the market moves higher, 20% it falls, and then gets bought and moves higher again. So for me, it's very much, these are reasons to be cautious into July, August, and the fall, unless we get more policy intervention. Read easing. There's no rate cuts in the future, maybe September, but they have been priced out for the most part because of a solid labor market still until we get news we can use and rising prices. So we don't really have that as a backdrop. We just have good old consensus, right? Bullish bent and passive investing and lots of stealth QE underneath the surface between Fed liquidity, Treasury short-term bill issuance, and then of course we've got the AI story. And it's the story that also keeps us engaged. And you're telling it well. So I understand why you're bullish.
It is strong.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.